Hi. In this video we will be talking about debt management. Watch this video to the end to learn best practices for tackling your debt head-on. Welcome back to the International CEO. In the complex landscape of personal finance, debt management stands as a fundamental pillar of financial health. The burden of debt, whether it stems from student loans, credit cards, mortgages, or other sources, can weigh heavily on individuals and families, affecting their overall well-being and financial stability. However, navigating the terrain of debt can be daunting without a clear roadmap. This comprehensive guide aims to provide a deeper dive into debt management strategies, empowering individuals to confront their debt head-on and embark on a path towards financial freedom. Understanding your debt. Before embarking on any debt management journey, it's crucial to gain a thorough understanding of the debt landscape you're facing. This involves not only identifying the types and amounts of debt you owe but also comprehending the terms and conditions associated with each debt instrument. Here are some key steps to understanding your debt. Assessing your debt portfolio. Begin by compiling a detailed inventory of all your outstanding debts. This includes credit card balances, student loans, auto loans, personal loans, and any other forms of debt. Take note of the outstanding balances, interest rates, minimum monthly payments, and due dates for each debt. Distinguishing between good and bad debt. Not all debt is created equal. While some forms of debt, such as mortgages and student loans, may be considered good debt, due to their potential to generate long-term value or provide tax advantages, others, like high-interest credit card debt, are often categorized as bad debt. Understanding this distinction can help prioritize which debts to tackle first. Reviewing terms and conditions. Take the time to review the terms and conditions of each debt instrument, paying particular attention to interest rates, fees, and penalties for late payments or early repayment. Creating a budget. With a thorough understanding of your debt landscape in hand, the next step in effective debt management is creating a budget. A budget serves as a roadmap for allocating your income towards debt repayment while still covering essential living expenses. Here's how to create a budget that works for you. Calculate your income. Start by tallying up all sources of income, including wages, salaries, bonuses, rental income, investment dividends, and any other earnings. Be sure to account for both regular income and any irregular or fluctuating sources of revenue. Track your expenses. Keep a meticulous record of your monthly expenses, categorizing them into fixed expenses, e.g., rent or mortgage payments, utilities, insurance premiums, and variable expenses, e.g., groceries, dining out, entertainment. Consider using budgeting apps or spreadsheets to streamline this process and gain insights into your spending habits. Identify areas for savings. Once you've tallied up your income and expenses, scrutinize your spending patterns to identify areas where you can cut back or eliminate unnecessary expenditures. This might involve reducing discretionary spending on non-essential items, renegotiating service contracts or subscriptions, or finding ways to lower recurring expenses like utility bills. Allocate funds for debt repayment. With a clear understanding of your income and expenses, determine how much you can realistically afford to allocate towards debt repayment each month. Ideally, aim to pay more than the minimum monthly payment on high-interest debts while making at least the minimum payments on all other debts. Monitor and adjust. Budgeting is an iterative process, so be prepared to monitor your progress regularly and make adjustments as needed. Review your budget monthly to track your spending, reassess your financial goals, and adapt your budget accordingly based on changes in your income or expenses. By creating a budget that aligns with your financial goals and priorities, you lay the foundation for effective debt management and overall financial well-being. Prioritizing your debts. Not all debts are created equal, and prioritizing which debts to tackle first can significantly impact your debt repayment journey. Two common strategies for prioritizing debts are the debt avalanche method and the debt snowball method. Here's how each method works. Debt avalanche method. With the debt avalanche method, you focus on paying off debts with the highest interest rates first while making minimum payments on all other debts. By tackling high-interest debts aggressively, you can minimize the total amount of interest paid over time and accelerate your journey towards debt freedom. Debt snowball method. In contrast, the debt snowball method involves paying off the smallest debt first, regardless of interest rate, while making minimum payments on larger debts. Once the smallest debt is paid off, you roll the amount you were paying towards that debt into the next smallest debt, creating a snowball effect that gains momentum over time. Both approaches have their merits, and the best method for you will depend on your individual financial goals, psychological preferences, and risk tolerance. Consider experimenting with both methods or combining elements of each to find a strategy that works best for your unique circumstances. Negotiating with creditors. If you're struggling to make payments on your debts or facing financial hardship, don't hesitate to reach out to your creditors to discuss your situation. Many creditors are willing to work with you to create a repayment plan that fits your budget and helps you avoid defaulting on your debts. Here are some tips for negotiating with creditors. Be proactive. Don't wait until you're already behind on payments to reach out to your creditors. Instead, be proactive and contact them as soon as you anticipate difficulty making payments. This demonstrates your commitment to honoring your financial obligations and gives creditors an opportunity to work with you to find a solution. Explain your situation. When speaking with creditors, be honest and transparent about your financial difficulties. Explain the circumstances that have led to your current situation, such as job loss, medical expenses, or other unexpected expenses. Providing documentation, such as pay stubs, bank statements, or medical bills, can help support your case and demonstrate the validity of your hardship. Explore repayment options. In many cases, creditors may be willing to offer alternative repayment options to help you manage your debt more effectively. This could include reducing your interest rate, waiving fees or penalties, extending your repayment period, or setting up a hardship repayment plan based on your ability to pay. Get everything in writing. If you reach an agreement with your creditors, be sure to get the terms of the agreement in writing. This helps protect both parties and ensures that there is a clear understanding of the terms and conditions of the repayment plan. Keep copies of all correspondence and documentation related to your negotiations for your records. Exploring debt consolidation. Debt consolidation is another option for managing multiple debts more effectively, particularly if you're struggling to keep track of multiple payments or high interest rates are weighing you down. With debt consolidation, you take out a new loan to pay off your existing debts, consolidating them into a single monthly payment with a potentially lower interest rate. Here's how debt consolidation works. Debt avalanche method. The debt avalanche method involves prioritizing debts based on their interest rates. Start by making minimum payments on all your debts, then allocate any extra funds towards the debt with the highest interest rate. Once that debt is paid off, move on to the next highest interest rate debt, and so on. By tackling high interest debts first, you can save money on interest in the long run and accelerate your debt payoff. Debt snowball method. The debt snowball method focuses on paying off debts from smallest to largest balance, regardless of interest rate. Start by listing your debts in order from smallest to largest balance, then allocate extra funds towards paying off the smallest debt while making minimum payments on the others. Once the smallest debt is paid off, roll the amount you were paying towards that debt into the next smallest debt, and continue this process until all debts are paid off. While this method may not save you as much money on interest, it can provide a psychological boost by quickly eliminating smaller debts and building momentum. Hybrid approach. Some individuals may find success with a hybrid approach that combines elements of both the debt avalanche and debt snowball methods. For example, you could prioritize debts based on interest rates but start with the smallest balance debt to gain momentum. Alternatively, you could focus on high interest debts first but occasionally pay off smaller debts to maintain motivation. The key is to find a strategy that aligns with your financial goals and motivates you to stay on track. Bi-weekly payments. Another effective debt repayment strategy is making bi-weekly payments instead of monthly payments. By making half of your monthly payment every 2 weeks, you'll end up making one extra payment each year. This can help you pay off your debt faster and save money on interest over time. Just be sure to check with your lender to ensure they accept bi-weekly payments and apply them correctly to your account. Windfalls and bonuses. Windfalls such as tax refunds, work bonuses, or unexpected inheritances can provide an excellent opportunity to make a significant dent in your debt. Rather than splurging on unnecessary expenses, consider using these windfalls to pay down your debt faster. By applying lump sum payments towards your outstanding balances, you can accelerate your debt payoff and reduce the total amount of interest you'll pay over time. Lifestyle adjustments. Making temporary lifestyle adjustments can also help free up extra money for debt repayment. Consider cutting back on non-essential expenses such as dining out, entertainment, or luxury purchases until you've made significant progress on your debt. You may also explore ways to increase your income, such as taking on a part-time job or freelancing gigs, to boost your debt repayment efforts. Negotiate with creditors. If you're struggling to make payments on your debts, don't hesitate to reach out to your creditors to discuss your situation. Many creditors are willing to work with you to create a repayment plan that fits your budget, such as reducing your interest rate, waiving fees, or extending your repayment period. Be proactive and honest about your financial difficulties, and be prepared to provide documentation to support your case. Thanks for watching. If you found this video helpful, please give it a thumbs up, hit that bell, comment, and subscribe for more content on the International CEO. See you next time.